All right. What's good, everyone? Welcome back to the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone? How you doing?
Man, we see the stock market kind of sold off a little bit today, man. The Dow, the S&P, and the Nasdaq kind of like slid again. I think yesterday we see some selling pressure also yesterday, and today we just like I think we just gonna have like a big drop today. So let's talk about that a little bit about that, man, because I feel like there's some pressures happening. Like, we have like geopolitical issues. We have some information that I think with, especially with that thing with Canada that I sent you, I feel like something is happening
Mm,
over there also. So there seems to be some pressure coming to the markets from different places. I just don't know where it's coming from and what's the reason for that. But again, man, and we see like gold and silver hit another record high. Like, it's like I don't know what's happening, but it's like, people like the investors are basically pouring all their money into this to silver and gold. So that two minerals are just like skyrocketing. You know what I mean?
yeah,
So
silver's trading like a tech stock.
man, it's crazy. You know what I mean? Like, that thing went from like 60, $70 to like, God knows, like, I don't know what's the last number we hit right now. I think,
Yeah, I use SLV as my proxy.
ooh, we are 84 at
Yeah,
SLV.
84.56 on SLV, and we were up almost 8% today, which is
Bro,
crazy.
that's crazy. A month ago, like if you just look at December, we were at like $52. That's nasty, man. That's crazy. But yeah, let's talk about this price action, man, because if you didn't pay attention to that, man, you definitely got clapped.
Yeah, so today, when I was looking at the market, a lot of the selling pressure was concentrated in a lot of the high beta tech stocks, right? So when I looked at um, QQQ and I looked at SPY, those um, those stocks that have the heaviest weighting in that index got hit hard today. So Amazon got hit hard, Microsoft got hit hard, Meta got hit hard. Nvidia was down almost 2%. AVGO was down over 4%. Now, I looked at the RSP. The RSP actually finished positive on the day. So again, you got a negative SPY, negative 0.5% on SPY, but you got a positive RSP, about positive 0.5%, which tells you that a lot of the selling pressure that we're seeing is still concentrated in technology. Now, is this carryover from last year where people are starting to sell their winners from last year and reinvesting into some of the laggards from this year? Possibly, because
Possibly.
if you look at the index that was the winner today, IWM.
Yep.
So we keep looking at the small caps. The small caps had a really solid day today. And I want to say over the last, what, week or the last month, they're up
This,
almost
yeah.
4%. So if you look at the
Yep.
leadership in what is driving market performance, it's not what was leading last year. IWM is the clear leader in the indexes, which I thought was very interesting today. And this is something that we've addressed and we've talked about. And, until something changes materially. Now, the Fed decision on the 20th about what happens with rates and what they're seeing could take a little bit of steam out of that momentum. But right
Yeah.
now, a lot of the momentum is with the small cap stocks right now. And tech is kind of lagging right now, kind of struggling to get out the gate. Now, Google's made all-time highs this year and things like that. But the leadership of where we're seeing a lot of the market movement to the upside is coming from. It's coming from small caps and
Some small
other
cap.
sectors that were lagging last year. So I
Yep.
thought that
Yep.
was very interesting today.
Yep. I mean, definitely, like, I agree with you. Tech kind of got a smack today. Like, if you look at Broadcom was down like 4%, Nvidia, Micron Technology also like
Hmm.
1%. A lot of those stock, all they all got just smack. And I mean, it makes sense. Like you said, like, some of them are been running like crazy, and some people taking more profit and throwing it into like a stock that might not have done really well last year. It's still a good company. It's just haven't done really well. So
Correct. Yeah.
the other thing is, if you look at some of the banks reported, Wells Fargo dropped more, like it fall like more than 4%. Bank of America dropped. Citigroup also dropped, despite their result. Like, they beat consensus and estimate, but traders, we just and investors just didn't look at them as strong enough to support this move. You know what I mean? So we see a
Correct.
lot of those things just like kind of like, especially the banks, just dropping.
Yeah. And if you look at the banks, another thing that I will say about the banks is that if you look at where they came from November until the end of December, I mean, some of these banks made some really, really, really strong moves. So if you
Yeah.
have, so one of the things as a trader to and an investor that you have to sometimes realize too is sometimes when you have a company that makes a very strong move going into a earnings report, and that earnings report doesn't necessarily blow expectations out the water, it's kind of like, it's average or it kind of meets expectations.
Right.
People aren't going to want to pay more for that stock
Hmm.
if it didn't really blow things out of the water. Like I was looking at Citibank. We go back to Citibank. Late November, Citibank was trading under $100. Citibank hit a high going into the earnings report of 124. Right.
Crazy,
So,
crazy, crazy.
and the numbers really didn't jump out at you. You know, business looks good, things look solid, but nothing really jumped off the table in those earnings. You look at JP
Yeah.
Morgan. JP Morgan had a strong December, hit an all-time high of 337. You look at Wells Fargo. Wells Fargo, from November up until $82 stock went all the way to 97, had a strong fourth quarter. And then if we look at what was the last one? Oh, Bank of America. So Bank of America, fairly decent going into the end of last year. So when the numbers don't jump out at you, also too the rhetoric about possibly capping the 10% on credit cards. We'll get into that discussion later. But yeah, I still think financials are a solid place to be, but none of those numbers that I saw in that earnings report to me would justify you know buying over the price that we saw a couple days ago. So
Yeah. Yeah.
maybe this pullback presents an opportunity, but I'm
And
not.
and that's what I was gonna say. I was like, I mean, could this be a repeat of 2024, where it's like, I mean, 2025, where every dip kind of just like get bought up, present opportunities for people to buy in? I don't know. We shall
Mhm.
see where what levels we're looking at right now.
And if
So
if you're not familiar with the way a lot of the traditional banks do trade, a lot of times after their earnings report, they drop.
you just
Like
drop, yeah.
they just drop.
Hmm.
Like that's just something I see on a regular basis. And then eventually, they recover. So we'll see what happens. This gap down, 4%, 3% on some of these names might be a little bit excessive. So we'll
Right.
see what happens in the near future.
I mean, let's talk about that. Donald Trump proposing a cap of 10% on interest rate that they can charge customers. I mean, that kind of add also pressure on top of those banks, because now it's like we can't really go above 10%. I mean, it's still a proposal, like, but that can potentially impact some of their revenue, because like that's how most banks make money on credit card, for
Correct.
those fees and interest that goes on top of it. So
Yep.
if you cap that, I mean, you potentially hit in their pockets too. So let's talk
Correct.
a little bit of that. Like, I think some of that might have definitely impacted the banks, but I mean, traditionally, like you said, like once they report, they usually kind of pull back anyway. So
Yeah, so the businesses that you have to be mindful of that could be affected by some of these, you've got your traditional banks, your Capital Ones, your JP Morgans, your Bank of America, your Wells Fargo. Any bank that issues credit cards is going to be affected if this
yeah,
passes through. Now, I will say this, at this point, it's just a proposal, as you mentioned, it's just noise. And this is not something that the president can just implement on his own. From what I understand, it's something that Congress will eventually have to vote on and have to pass. And, Trump is saying that 20 and 30%, interest rates on credit cards is ridiculous and that needs to be capped. That will then limit some of the revenue that some of these banks will bring in from credit card interest and things like that. So whether this gets approved or not, I do not know. I think from a consumer standpoint, I think it would be good for the consumer. But from a
mm-hmm.
business standpoint, um, it would hurt the business because again, that's revenue coming off the table. So, and to me, it's like, okay, if you're capping 10% interest on someone with a 500 credit score, right? What would
Mm-hmm.
someone with an 850 or 750 credit score get then? Because they
Yeah,
can't be in the same boat.
mm.
So does that mean that you have to create a
A
scale now,
different scale. Yeah, yeah,
or is it everyone's 10% across the board? Because even if you have a good credit score, some credit cards will still charge you around like 12 or 10%.
yep,
So if I'm
yep,
getting 10% at a 500 credit score, I'm assuming somebody with 850 or 750 should be getting what? 7%,
mm-hmm.
6%?
Mm-hmm.
So
I
that's
mean,
that's
but you never
that's
know.
how
That
I
might
look at it.
they might turn around and put actually other fees as opposed to like the annual percentage rate, whatever APR. They might turn around and be like,
Mm,
okay, kind of like with where American Express is doing. I think Discovery was doing the same thing,
mm.
where they charge you membership fee. Basically, it's like, hey, you want to be a member of this credit card company? Guess what? You have to pay
They
a monthly
charge you a
fee or a
fee.
yearly fee. That's
Oh,
probably how they're gonna make their money on the back end, right? Because
yeah, a
this
credit
is
card,
only a cap.
a credit card tariff.
There you go. Because they're not gonna let it go. If this get passed, consumers are gonna get they're gonna get penalized somehow. You know
That
what I
makes
mean?
sense.
So
That makes
you might be
sense.
closing door on one thing, but you're opening door to other things. So yeah,
Yeah,
it's gonna happen, man.
that's true. That's true. Yeah, they might get creative and find out, okay, what ways can we make up for this missing revenue if this does actually
Absolutely,
pass through? Yeah,
absolutely.
I didn't think of that.
They're not gonna let it go.
That's
They're
crazy.
not gonna let it go, man. But let's talk about those the CPI numbers, bro. It's like, I mean, if you look at the readings from again, we got a delayed reading, right? Because technically these numbers are from November. Let me see.
I
Is it
think
November
it's
and December
I
combined?
think I don't know if it's combined, but they said December.
Okay.
Yeah, I don't know if I actually trust it, but I mean,
Right. But the PPI rose by just 0.2% in November. The data that was below the Dow Jones consensus of 0.3% gain. So again, it didn't really rise that much. So and I don't know how the market reacted because I was watching the market yesterday. Like, I mean, we kind of dropped a little bit in
so
terms of
this
like the other stocks.
yeah, so the CPI print came in line with expectations yesterday. And
Mm-hmm.
when that news dropped, we saw an initial spike in the
Yep.
market, right?
Yep.
So everything kind of, shot up pre-market. Now, the only problem with that was we weren't able to hold the opening price action with that
Yep.
move. Eventually,
Yep.
the markets kind of sold off. So I think IWM opened up higher and then finished the day lower.
Yep.
SPY did the same thing, and I want to say QQQ also did the same thing. Then today we got the PPI numbers, which came in a little hotter than expected.
Yep.
So now we start raising the question of whether or not that read will eventually find its way to the consumer. That we don't know, and only time will tell. But the market did not react too favorably with the PPI number today
Yep.
because,
Yep. Yep.
we saw a lot of names sell off, with the exception of IWM and then some of the other names that make up like the RSP, the equal weight. So I was actually surprised because I thought that the tariff ruling was going to come out today, and it didn't. And I thought the market was going to react and move higher after that, but nothing happened. Everything
Mm-mm.
kind of still sold off, with the exception of
Mm-mm.
IWM. So yeah, very interesting sets of data. I've gotten to a point where I don't trust it yet. Like I'm not completely in agreement with the data, but it is what it is. But again, hotter PPI. The question now moving forward is, will that number then translate to CPI moving forward? And that's something that
Right.
we all need to definitely watch, because if we start seeing hotter inflation on the CPI front, that's not going to be good,
That's
especially
not gonna
when
be good.
when we're expecting rate cuts to happen. So,
Yeah, I mean, I think again, while Jerome is in the office, I think Jerome is gonna keep fighting. Even if you do a rate cut, it's not gonna be like something crazy, number, right?
mhm.
I think once Jerome leaves the office, or whoever's gonna get in there is gonna be, a pro Trump or a pro administration sentiment. Because if it's up to this administration, trust me, we'll be back to 0% interest, 0% rate right now. And no, it will probably be overnight. You know what I mean? But I think they are fighting so hard against the Fed right now. And I mean, you just saw that the whole Fed is under investigation for criminal something when it comes to like them building that building. I was like, what is happening? Now we're going up to the Fed, the Fed team. We're trying to build a building for themselves, and we're questioning like where's the money coming from. Like I was
Oh
like,
man.
this is crazy. But it's like um politics, and sometimes when you add like all this like different economic situation, it kind of like creates a whole instability in the market. You know what I mean? So again, putting pressure on Jerome to maybe either quit or maybe even like leave altogether, even though his tenure is almost up. Like, just let the man finish and you guys can do whatever you want after that. Like, it just it makes no sense trying to make the man's life harder than it is already. So, but again, interest rate, I think we're gonna get a drop. I think it's gonna be right after whoever is supposed to take over after Jerome. Like, I'm telling you guys, like, keep an eye on that.
I'm wondering how the new Fed chair, whoever that person is, how they're going to get along with the committee. Is there going to be a lot of friction within the committee?
Yeah.
Because it seems like, at least with Jerome in the chair position now, the committees, you don't hear a lot of friction when, they're able to talk and they're able to kind of give their opinion about what they're seeing and things like that.
Mhm.
I wonder if there's going to be more friction at the Fed level moving forward,
Yep. Yep.
as far as voting on what happens with interest rates, what their consensus is, and all that stuff. So it will be interesting. Now, even though Jerome is not going to be the chair, he'll still sit on the committee, I think, moving forward. I don't know
Yep.
for how
Yep.
long, but he'll still be on the committee. So that will be a very interesting dynamic to watch and see, after he leaves. Because, yeah, I don't know. I understand. I understand the reason why you want to cut inflation, but I'm still on the board of it makes more sense to be cautious when you're unsure.
Yeah.
Now, especially when they're getting late consensus data on some of the stuff that we were seeing from, that we didn't get during the government shutdown, you know, you don't want to have to go back and make mistakes on some of those things. So I'm very interested to see what the back half of 2026 looks like once all that stuff gets ironed out.
It's gonna be an interesting time. I'm gonna tell you
Yeah, yeah.
that. It's
We
gonna be
might
an interesting time.
yeah, we might see like, a 20 or 30 VIX again.
Yeah, in a heartbeat.
That would not surprise me. That would not
Oh
surprise me.
man.
So yeah, we'll see
Well,
we'll see how that plays out.
we'll be ready for it. So yeah. So I know you want to do a breakdown on the CEG, man. If you guys don't know what CEG is, Constellation Energy. So again, CEG is or Constellation Energy is one of the largest nuclear power operator in the US. I mean, right now they're supplying carbon-free base load electricity to utilities, corporations, and increasingly data centers. So again, you guys heard us talk about power, 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 and not just any power, but power that's sustainable, power that's cheap to make, power that's gonna be able to, easy for you to deliver energy to like the data centers and stuff. We were talking about that a lot of times. We talked about like the AI demand for power, right? So that's gonna be a crazy need that we're gonna have to fulfill real soon. Clean energy without any disruption, right? I mean, if you think about solar or wind, they can go up and down, right, depending on the condition of the environment, basically. But with nuclear, we can probably have more consistent energy with that one. So, again, let's talk about CEG, man. Let's break it down. Let's talk about the case against or for CEG, and let's dive in there.
All right, so let me pull up my slides and share my screen. So let me give one quick second to start that. All right. All right. So one of the biggest things that we've discussed, over the last couple of weeks is as we move into this AI, you know, like what do you call it? The demand for data centers, the demand for more AI workload. Power is going to be a very necessary element to make sure that that runs smoothly. Because remember, we know that data centers are going to be running 24/7, 365 every single year. In order to make that happen, power needs to be available and it should be able to, handle those workloads. CEG is a name that has come up a lot in that conversation. There are some others I'm going to mention that we probably want to talk about, like NRG, Vistra, GE Vernova. All of these companies, in my opinion, are going to be essential to meeting the demand of power moving forward. So I wanted to start with Constellation. and do an analysis of them, and then we'll go from there. So let us jump right into it. All right. So CEG, they've got a diverse business when it comes to power development and distribution. So they produce and sell energy products, services within the US. So look at their different modes of business: electricity, natural gas, energy related products, and sustainable solutions, just like nuclear. So that's something that they've been, looking into and talking about. They operate across different regions in the US: Mid-Atlantic, Midwest, New York, ERCOT, and other power regions. They own approximately 31,676 megawatts of generating capacity across nuclear, wind, solar, natural gas, and hydro assets. So nuclear is part of their business, but it's not their sole business. They have a very diverse distribution channel when it comes to distributing power. And that is something that I think bodes well for their business models because they have different avenues and different resources they can tap in if somebody wants to come to them and wants power distributed. Revenue is primarily driven by electricity sales. So, in their regions. Their customers are distribution utilities, municipalities, cooperatives, and then end use customers like maybe hyperscalers. Margin profile depends on power prices, hedging strategies, nuclear output availability, and fuel costs. So, how much money they're making on an annual basis depends on whether or not some of their input cost goes up or goes down over time. And we know that energy can be a very, very volatile pricing moving throughout the year because we go look at, oil and gas prices. That thing does fluctuate. Natural gas prices fluctuate a lot throughout the year, so that can affect their margins. So let's look at their revenue. So it's broken it down by region, and we can also look at their total revenue. So total revenue for fiscal year 2024 was 23.5 billion dollars, and we see that through the 12 months, the trailing 12 months of 2025, that's increased to about 24.84 billion so far. So pretty good revenue consistently growing over time. And if we look at some of their regions, Mid-Atlantic increased by about $1 billion. We see an increase in the Midwest. We see an increase in New York. We see an increase in the ERCOT region, and other power regions are pretty much flat. So we're starting to see increases in their revenue moving forward. Now, the question is, will this continue to grow as demand increases? So that's something that you want to definitely pay attention to. So other peer and comparisons of people that we can take a look at in their sector, NRG is one. AES has US and an international business. So maybe not apples for apples, but they still generate power in the US. And then also VST Vistra. Vistra is another stock that comes up a lot that's actually done pretty well over the last couple of months. So my goal is to hopefully do an analysis of some of these different companies, and then you can start making a decision on whether it makes sense to possibly start a position in some of these companies moving forward. So looking at their revenue over the last um, 5 years, you can kind of see back in 2020, about $17.6 billion in revenue that increased in 2021. And then we saw a pretty substantial increase in 2022, not much of an increase in 2023, and a slight decrease in 2024. And then so far through September 30th, 2025, you've got $24.8 billion in revenue. So annual or the compounded annual growth rate right now is 7.57%. So that's pretty good. Nothing that I would put in the category of hyper growth. Now, the question is, does this get bigger? Because again, demand for power, we know it's going to increase. The question that we have is, do these numbers start to change? And does CEG become a major player in development of power in the future? Now, one of the things that I do want to mention is I don't think that they're at full scale when it comes to their nuclear distribution, not just yet. I think that from what I heard, there's some nuclear plants that they're trying to revive that are not yet online yet, and they're I think they got a partnership with Microsoft, and I want to say a partnership with Amazon to bring some of these nuclear power generation um, development projects online so they can distribute more power. So the question is, when those things start working and start distributing power, do these numbers change? If they do, this could be a potential growth opportunity for CEG because, again, nuclear is not a really big part of their business yet, and they're trying to be able to distribute more of that in the future. So, something to keep in mind and to watch. Profit margins. So we can kind of see that their profit margins did take a big change in 2023. So profit margins were positive in 20, went negative in 21 and 22, but you can kind of see the increase in profit margins in 23 and 24. And that's really, really, really done well moving forward. So that's another thing that we're starting to see. Profit margins are increasing, revenue is increasing. Those two can be good omens when it comes to looking at companies that have potential for growth. Execution is also key, and also controlling costs because remember, power generation is a very capital intensive business. So remember that if it gets more expensive to develop and produce, that could be something that does affect the business in the long run. So something to monitor moving forward. Operating margins and net profit over time. So we can kind of see the operating margins, another part of the business that's done very, very well. So you look at their operating margins in 2020, went down in 2021, went down in 2022, but you can see in 23 and 24, we're looking at, you know, pretty good increases when it comes to operating margins for the business. Again, that's another thing that tells you about the efficiency of a business. Are your operations getting more efficient over time? And that's another thing that you also want to look at when you're analyzing a balance sheet. If you see a company that's increasing revenue, but their profit margins are decreasing, that tells you that the business is not efficient. So keep that in mind when you're analyzing stocks and looking at businesses is if you're looking at increases in revenue, you also want to start looking at better efficiencies in their profit margins moving forward. This next slide is something that doesn't really bother me, but free cash flow has been pretty much negative over the last 5 years. Now, why doesn't this bother me? I mentioned before, energy distribution is a capital intensive business, which means that you're probably taking a lot of money from your operations and having to reinvest into, maintenance, into building things. And these things are not cheap. So when I look at the free cash flow, I'm not as alarmed by the numbers. I will say that, again, I don't like seeing this on a normal basis, but for a capital intensive business that requires real estate, that requires land, and things of that nature, this is probably something that does not come to me as a shock. So, free cash flow, not something that I'm going to put a lot of stock on because the numbers are negative. So valuating this company on a trailing PE and forward PE basis. So on a trailing PE basis, when you look at their peers, they're, I'd say middle of the pack. NRG is a little bit cheaper. They're more of your traditional utility company. Vistra is a lot more expensive. Again, if you go look at that stock's chart, you'll see that that stock has made a very, very big move over the last 12 months. AES is a little bit cheaper when it comes to valuation. Now, on a forward PE basis, they're more on the expensive side at 28.75. VST, NRG, and AES are a little bit cheaper on a forward PE valuation basis. So I would not say this is a cheap stock, but I will also say that it is also not expensive, in my opinion, when you look at where it lines up with its peers. So again, the biggest thing that I will be looking at with CEG is what happens when they're able to start distributing more nuclear energy, if that's a project that eventually starts getting online and when that does get online. So that would be something if I was on an earnings call, I would ask them, when do you guys plan to have this, working on a, on a wider scale moving forward? Balance sheet. So again, assets 52 billion, liabilities 39 billion, shareholder equity about 13 billion, only about $9 billion in debt and 3 billion in cash. So again, very capital intensive business. You can kind of see that there's only about a $12 billion difference between total assets and total liabilities. Um, debt is pretty good, but you can also see that they're have less cash than debt. So this is not a company that can pay off all of their debt with the cash that they hold. A lot of this business probably has to do with the fact that they're reinvesting into different projects that they're trying to bring online in the future. So um, probably not something that I would be overly concerned about, but it's also something that I would not highlight as something that I'm happy about. So yeah, we'll have to see. I would like to go back and see a chart of how much their cash has either increased or decreased over the last 5 years. That's probably something that I would probably take a look at before I pass any judgment. When you look at whether their business is highly levered, okay, so again, if it's a highly um, capital intensive business, are they highly levered? And the answer to this question is no. So I like to look at debt and equity. It's below 2%, and debt to assets is below 70%. So from and the calculation that I use is here. So when I start looking at this is a calculation for the quick ratio. So when I start looking at these calculations and looking at what's available on their balance sheet when you compare their debt and their equity, this is not a business that's highly levered, so which is always good. So even though they have almost $40 billion in debt, not a lot of borrowing at an expensive rate to the point where it's affecting their business moving forward. So I do like that about this stock. Then you look at what the analysts are saying about the stock. So, right now they've got a buy rating. Average price is about 405. All of this is based on stockanalysis.com. And this is looking at 14 analysts when it comes to rating the stock. So, market is fairly bullish on this stock as well. I think where is it trading now? It is trading at 330. So, yeah, for now, the consensus is bullish. I don't know when they report their next earnings report, but probably something to be mindful of as well. So when you look at the key metrics, again, compounded annual growth rate, 7.5, which is good, not something that jumps out, um, exponentially. Profit margins are expanding, even though so far through the last 12 months, it is a little bit down from fiscal year 2024. Good debt to equity, not a lot of leverage. But based on the key takeaways that I'm looking at with CEG, is what is the execution and the plan when it comes to the nuclear side of their business, and how that will either create more power opportunities and how long it will take to get online. So yeah, that's pretty much it for me when it comes to CEG. But yeah, I'll be looking at BST later, and then also look at NRG, because those, and then GE Vernova. GE Vernova's financials may not be as readily available because it's a stock that just started trading, I think, in 2024 off of the regular GE. So, there might not be a lot of data available, but NRG and BST are names that we'll do on a later date when it comes to our analysis. So.
It's interesting because I see, so CEG is kind of like nuclear today, right? So like they have real reactors, they have cash flow, they have a long-term contracts for powering AI data centers and all this stuff. So it's kind of like a low risk, and they trade kind of like a big infrastructure. You know what I mean? So
Correct.
it,
Yes.
it is it is something that's like that's existing today that you can kind of look into and be able to invest in with, with minimum risk, I would say. As opposed, if you look at like something like Alcalo, is there's still no revenue. You know what I mean? It's like, but there's a massive, massive, massive upside to Alcalo, right? Like if those modular reactor actually becomes a reality, that company is going to grow up very, 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 very fast because there's a lot of volatility surrounding it, right? So again, you can either go with something that's existing, that's proven, that's gonna move the way it's supposed to move, and because you're already seeing cash flow coming in and all these different things, or you can go with something like Aklo, or you can do a combination of all of these things above. Because at the end of the day, we know energy is going to be really, really important in the next 5 to 10 years. So
Correct. Yeah. CEG is one of those companies where it's kind of like if you're investing in energy, you're investing in something that it's fairly, their business model is fairly stable, right?
yeah,
They
yeah,
they they are, and they have a diverse business model. Oklo only does nuclear energy. They don't
nuclear,
do anything outside of
yeah.
that. CEG does nuclear. They do natural gas. They do, your standard utility. So there's a diversity in their business. So, um, and they're off the highs. I think VST is another name that's off the highs. You can kind of see. the last couple of months, VST has kind of pulled back from 1982 down to about 160-ish. So, these are just names that I would say, put them on your watch list, do your research, understand the story behind it.
Yep.
Remember, this is not something that's going to happen overnight, right? The demand for power will happen once we start getting more data centers online. A lot of these data centers are just being built,
Right.
right? Once they've been built, once they go online and start needing power, then some of these businesses are going to be like, okay, who gets the contract to provide power to these data centers? Who are they going to be working with? CEG's got some commitments from Microsoft and I think Amazon for the future.
Yep.
But
Yep.
again, this is not something that's going to happen tomorrow or next month or maybe even next year.
Yep. Yep.
But these are going to be
Yep.
things that you want to think about, for the next 5, 6, 7, 8, 9, 10 years moving forward.
Yeah. So let me ask you this then: is this a buy here? Like, so should people think about buying CEG right now, or is this more like wait and
So
see?
I would put this on my radar because if I'm looking at how the technical chart looks now, and this is just my personal opinion, you're looking at a stock that has been trending to the downside. You also are looking at a stock that has been getting rejected near the 200-day moving average on the daily. So I would, I'm not saying that I wouldn't buy it here, but I would not be surprised if we see more resistance moving forward. That is one thing that I will say. Actually, no, let me go back to CEG. I'm looking at BST, sorry. Yeah, so CEG has been trading sideways, right? And if we look at it, okay, so CEG just found support at the 200 SMA. When was that? January 8th, right? And right now it's still looking for direction. But from a technical standpoint, I'm kind of neutral on it from a technical standpoint. I'm not bullish or bearish because if you just look at what's happening over the last couple of weeks, it's just a lot of consolidation.
Yeah.
We broke last month's low. So this is a stock that may possibly continue to move downward to the bottom. And we don't have an earnings report, I think, until February. So I would not buy it at this level personally. I would continue to monitor it and see if we get more of a pullback, just based on what I'm seeing right now.
Okay. But overall, man, the story of energy is going to be very, very important. So that's one thing you guys got to keep in mind. It's not going anywhere. It's only going
No,
to get massive and massive from here on out. So
yeah.
yeah.
And
But
you can see a lot of the hyperscalers like, Meta, Amazon, Microsoft, Google, they're trying to get ahead of what they potentially see down the
yep.
road
Yep.
because they don't want to be in a position where they're getting desperate for power to meet their workloads, right? So, definitely keep,
And you don't want to be left behind, like if you're a big company, you don't want to, and you don't want to be left behind and go begging for energy. Like you already want to have a foothold somewhere. So yeah.
yeah. So we're seeing, you know, it's not, to me, it's not a one-off thing, right? When you see all of these trillion-dollar companies kind of doing the same thing,
It's
that kind
not,
of
yeah.
tells you that there's a trend happening, right?
Yep.
So
Yep.
sometimes you just got to follow the money.
Yep. Yep.
Yeah.
Absolutely. Well, let's move on, man. Tomorrow is Thursday, January 15th. The initial jobless claims numbers will come out in the morning. I think the number from last time was, I think it was forecasted at 215,000. So we'll see where we are. The previous number was 208,000 basically. So they're forecasting $215,000, 215,000 initial jobless claim for this time. So we'll see if we can exceed that or below that. We'll see how that move the market. We also have the U.S. import prices coming out. That's a delayed report. I think we have the Bostic speaks this week. A bunch of the Fed president is going to speak. So we have Bostic speaking, we have Barr speaking, Tom Birkin speaking. That's all happening tomorrow. So hopefully they don't say anything crazy. So we'll see. But they're speaking all the way till 1:30 p.m. Tomorrow. And then Friday we have more Fed um, vice chair speaking. Like we have Michelle Bowman speaking. I think Michelle, I don't know. Sometimes she says some crazy stuff, so we'll see what she says this time. And then we have Chair Phillips Jefferson speaking also on Friday. So we have a bunch of Feds on the panel this week. tomorrow and Friday. So we'll see. Hopefully, they don't say anything crazy that's gonna create some volatility in the market or pull the market one way or another. And also a
Mm,
reminder, Monday, January 19th, I think is the stock market closed on Martin Luther King? I think it is.
yeah.
So there's no trading on that day. So just give you guys a heads up.
Is that next week, Monday?
Mm-hmm.
Oh shoot, dang, that was quick.
Yeah. Yeah, I know, right? It just popped up. But yeah, next week, Monday, no trading, no invest, no the market will be closed. So just keep an eye on that one.
Gotcha.
All right, man. Well, heading into tomorrow, any last advice you want to give the people?
No advice, but I just want to say that Intel hit $49 today.
Bruh, we call that thing. We call that thing. Like,
Yeah, even though tech got smacked today, Intel still hit a new high, and we got past that $45 resistance level I was talking about. And
finally, man. It's crazy.
yeah, Intel continues to be one of the bright spots so far in early 2026. And if I'm not mistaken, let me see, Intel year to date,
Mm.
22% already year to date.
Even the way we close, man. Like I know it's a red hammer, but it's a hammer.
Hmm.
Some buyers came in when we had that little bit dip. Dang.
Yeah, so Intel has
Mhm.
been on a really, really nice move to the upside ever since the day before Christmas. So yeah.
Yeah. Hey, all I can say is, yeah, welcome. If you got in, you're welcome.
Send me my
Oh,
5% commission.
yeah, right. Venmo me $5.
I also take DoorDash gift cards.
There you go.
But yeah, Intel continues to be one of the brighter spots in the market. So,
Yep.
we'll
Yep.
see if the momentum continues. I will say mark your calendars for the earnings call on what date is that? The 22nd. So that's next week.
Sweet.
So if you're an Intel investor, make sure that you listen to the earnings call because to me that's something to pay attention to see if there's any momentum still behind their business. So
Yep. Yep.
yeah, CEO change, you know, was really what ignited it. He really had a vision for what he wanted from the business, and so far, it looks like they're executing on all fronts. So,
Facts.
yeah, I will say this though, if again with a stock that's up 22% year to date, even if the numbers are good on the earnings call, you still might see some selling if they don't
Right.
like jump
Right.
out
Right.
off the table. So just be mindful of that. So just don't say, oh, they beat EPS, they beat revenue. Why is the stock down? Well, you got a stock that's up 22% in like what, 2 weeks?
2 weeks.
People
Very
might want to
fast.
start. People might start taking profit. So just be mindful of that moving forward. So
Yep. Yep.
listen to what the guidance is. Listen to what they're working on, where they see potential growth. Yeah, and we'll go from there. So I know
Yep.
Trump is happy too because they put in what? How much money they put into Intel?
It was a lot, man.
Yeah.
And
So
they got it for cheap too. They didn't get it for like the actual price. I think they got it for cheaper.
yeah,
So
I want to say the U.S. position in Intel is probably up what 97%.
yeah, yeah. Because they were buying where like when it was still like a 20 something.
Yeah.
So
Yeah. So
she that's crazy, man. Well, with that being said, y'all have a good night. We'll talk on Friday with more information. Again, thank you guys for tuning in. We appreciate you guys always showing up. If you find this very beneficial, please, please, please subscribe, share, let other people know about our podcast. With that being said, man, y'all have a good night. We'll see you.